Hey, if you're a solopreneur and you have fluctuating income and you struggle to set aside enough money for taxes at the end of the year, then I want you to watch this video. It's going to be super helpful for you, even if you're like, I cannot spare a cent to put aside money for taxes right now. Stick with me because I'm going to help you with a few key things that will get you to a point where you can pay the CRA on time and you can feel confident about how much money you're putting aside. So the first things first, I'm going to talk to you about the different taxes, the difference in taxes in tax bills that you have to pay and which ones you're responsible for. And then I'm going to talk to you about how to actually forecast your income tax bill in a few minutes. I do it all the time. Takes me like 3 to 5 minutes without doing any complex math, by the way. And then I'm going to share with you how often to revisit your forecast of how much you're going to owe in taxes. So I'll tell you what my strategy is and how often I visit these numbers and how often you should as well. So if you're not familiar with me, my name is Jamie. I'm a CPA based in Toronto, Canada, and I'm also the founder of Chill Books. Chill Books is a fun, approachable financial education course that teaches the basics of bookkeeping and QuickBooks training and all the essential financial education that entrepreneurs need to maintain their finances and grow their business. So I've been in business myself for 6 years now, and I can tell you that I am still always keeping an eye on my tax bill, what my tax bill is going to be in the future. For example, last year, in the past year, I shifted my business model and I knew was going to be significantly impact my cash flow. And so at the time, I decided that I was going to stop putting aside money for taxes. Yes, this is me, CPA, okay? I was like, I'm gonna take a break from setting aside my tax money right now because I know cash flow is gonna be tight for a few months while I move through this transition. And that is the power of knowing these numbers and knowing how to forecast your tax bill and what your tax bill is going to be, because you can actually make strategic decisions based on what's going on in your business. So it doesn't mean that like once you know, you just like sit in shame because you can't afford to pay it. It's like once you know, you can start to make empowered cash flow decisions and structure your cash flow in your business to account for the tax bills that are coming your way. So what I did in this example was I took a break for a few months, and then once my business was picking up again, then I just increased the amount of money I was putting aside for taxes. These are the types of things I want you to think about if you're sitting here with me and saying, fuck, I don't want to know how much I owe because I don't have the money right now. You don't need to have the money right now, but you need to know what you're going to owe so you can start to strategize. You still have 7 months till next tax season. So let's get into it. First is the taxes that you need to be aware of. There are 3 different taxes that you likely or could be on the hook for. Number 1 is your personal income tax. So that is the one that we know best because that's the one we've been filing and paying forever. That happens in April every year. Your personal income tax filing is where you are going to file you're going to file and pay taxes based on the income you made in the year personally. So if you're a sole proprietor, then that is where you file your business taxes. So whatever money you made from your business, you are going to record on that personal income tax return and pay personal taxes on it. The other thing is if you're incorporated. If you're incorporated, then your personal income tax bill is where you're going to file and pay taxes for the salary that you paid yourself from the corporation or the dividends you paid yourself from the corporation. So no matter what your business structure is, you're filing that personal tax return, and depending on what type of structure you have, you're going to fill in different numbers. And then the other tax bill to be aware of is your sales tax bill. So whether you have GST, PST, HST, QST, whatever ST, your sales tax is a completely separate tax bill from your personal income tax and from your corporate tax, which we'll talk about in a second. So that needs to be treated separately. We're not going to go into detail on that today, but on how to forecast that bill today, but I have an amazing free resource. It's called What the HST Am I Doing? Comment below HST or GST, whatever you want, whatever ST you're working with, and I will send you a link to download that free guide, and that will teach you how to forecast those bills. And then The third tax that you want to be aware of is for my friends who are incorporated. If you have an incorporated business, then you have corporate income tax. So just like you're a person, you have personal income tax that is tied to you personally. You also, once you incorporate your business, you've now created a whole new entity, and now that corporation has its own income tax. So that's another tax to be aware of. We're not going to go into how to forecast the corporate tax bill today, but even if you're incorporated, you need to know how to forecast your personal income tax. So that's what we're going to get into. So those are the three: corporate income tax, personal income tax, and sales tax. You could be on the hook to pay all three of them. You could be on the hook to pay one of them if you're not registered for sales tax yet and you're not incorporated yet. It just kind of depends on where your structure's at. So the next is I'm going to teach you how to forecast your personal income tax bill. So no matter what business structure you have, your first step is to grab the tax calculator. I love to use the Wealth Simple tax calculator. If you just search Wealth Simple tax calculator, it'll come up for you, and just grab that calculator. And the first thing you're going to have to do is put in your province where you're based, and then you're going to fill in a few details that I'm going to walk you through now. If you're a sole proprietor, this is how you're going to fill in the calculator. First things first, you're going to go into your bookkeeping system and you're going to run a profit and loss report that tells you your net income. Your net income, which is your total sales for the year minus your total expenses for the year. If you don't have a bookkeeping system, that is where you want to start here, because without a bookkeeping system, it's going to be really hard for you to stay on top of knowing how much tax you owe. You're going to have to do a lot of manual work, and it's going to be hard for you to even track how much you put aside and all that stuff. So bookkeeping is the foundational piece to have this be a 2, 3, 4 minute activity. But if you don't have a bookkeeping system, grab my free solopreneur write-off guide, and that will teach you what net income is and how to calculate it. You can just comment right off below and I'll send you the link to that. And so first things first is get your net income, get the amount of money that you made from your business. And then you're going to take that number and fill it in the area of the form that's called self-employment income. So that's where you're going to plug in your net income. And then you're going to fill in look at all the other fields and see if anything applies to you. For example, if you put money into RSPs, you can plug that number in. If you've already paid some of your tax in installments for the year, you can put that in under taxes paid. If you have other sources of income, you fill that in as well so that you can get the full picture of your personal tax bill. And that's it. Those are the steps. Get your net income from your bookkeeping system, plug it into the calculator along with anything else that's applicable, and that's how you can keep on top and see what your tax bill is looking to be. Next is for my incorporated friends. So for you guys, you are going to go into your bookkeeping system to get the number that you've paid yourself in dividends for the year, if you've paid yourself in dividends. And if you don't know how you've been paying yourself, if you have not set up a payroll account and you're not running payroll, then I think it's safe to default that you're paying yourself in dividends, because that's kind of like the default, I think, way that people pay themselves if they haven't structured payroll yet. And so you're going to go into your system and you're going to pull the number for the amount of money that you've paid yourself through the year. For my friends that are in Chill Books, you know to grab that from your shareholder loan number. But however in your bookkeeping system you're tracking those payments to yourself, you're going to grab that number. And similar, if you don't have a bookkeeping system and you're incorporated, I want to raise the flag that you need to get on that. That's your first step to getting to the point where you can keep an eye on your tax bill. Where was I? So you're going to grab that dividend amount, and you're going to plug it into the part in the calculator that's called ineligible dividends. That means those are the dividends that are paid to you by a company that's not a publicly traded company. So I'm assuming your company is not publicly traded here. If it is, then you're probably not watching this video and you have basically your own version of Jamie doing all of this for you. But that is where you're going to plug your dividends, under ineligible dividends. And then you're going to plug in, if you pay yourself with a salary, you're going to plug in the amount you've paid yourself with the salary in the section called employment income. And then similar to the sole proprietor way of forecasting, you're going to plug in any other any other numbers that represent maybe you made extra money somewhere else and you want to put that other income in the calculator. If you've prepaid some of your taxes, say you've been paying personal tax installments, you're going to put that into the taxes paid section. And then if you've been putting money into RSPs, then you're going to put that money into that tax calculator as well. You'll see in the fields that it's like super, super easy to plug those numbers in. And then that's how you're going to get the number that you're going to owe in taxes. So that is how to calculate it. As you can see, it's really just a matter of grabbing the number from your bookkeeping system and plugging it into the calculator. And now we can talk about how often you want to revisit this calculation. So I like to do this activity quarterly when I'm feeling like things are really stable in my business, stable and predictable. And if I'm feeling like things are changing, or maybe I'm tight on cash, then I like to revisit this activity monthly. That way I can keep an eye on what my tax bill is going to be and make sure that I'm either, if I'm not putting the money aside, like in my example earlier where I decided to take a break just to help with cash flow for a few months. If I'm not putting the money aside, I can keep an eye on what that debt is going to be so that it's not a surprise 7 months from now. Or I could just make sure I'm not putting too much money aside, because obviously we don't want to put too much money aside for taxes when we could be using that money to grow our business or to go on vacation. I'm filming this video when I'm on vacation. I'll be on vacation when this comes out. Actually, I wore these earrings to represent the boats, the boat that I will likely be on in Mallorca when this video comes out. But you want to look at these numbers on a quarterly basis if you're feeling stable, or on a monthly basis if you're feeling like cash is tight, because that's when you'll be able to really be strategic with how much money you're putting aside, and just be aware of what debts are to come, even if you can't pay them. Even if you're at a place where you can't pay them, knowing what's coming allows you to start to strategize, and also takes away that anxiety of not knowing, because not knowing is like way more stressful than just knowing the number and then being like, okay, I can figure this out. I will figure this out. And yeah, so that's what I have for you today. And I hope you found this video helpful. If you did, please share it with somebody else who's a solopreneur that could benefit from them. We need to get this information out more and more, because tax season can be really stressful as an entrepreneur, and a lot of it has to do with just not knowing these numbers. So thank you for watching. And if you want more, comment write-off or HST below, and I'll hit you up with my solopreneur write-off guide or my sales tax guide, especially if you're feeling like some of this stuff went over your head. Start there. You got this. You can totally handle the finances of your business. I believe in you.